Hi friends, welcome to the NPTEL course Business Development from Start to Scale. We are in week 2 with the theme of business development strategies. In this lecture, the 10th in the series, we have a case study of business development excellence. The case study is with reference to Marico. I would term the case study as success in the face of adversity. Marico is a well-reputed and well-respected company in the Indian FMCG space. For the year ending March 31, 2022, Marico clocked a revenue of 9,452 crore and its market capitalization stood at rupees 65,118 crore. Marico started as a trading company established in 1887 by first generation entrepreneurs Kanji and Vasanji. In 1945, the father and son duo Vallabh Das and Charan Das took over the operations and they set up a small coconut oil mill. In 1948, all the business operations of the company were formalized under the name Bombay Oil Industries Private Limited. The 1950s were notable for further development of manufacturing infrastructure. The company acquired 2 edible oil units and 1 oleochemicals unit. The company also set up through acquisition a Vanaspati factory and a solvent extraction plant. In 1965, the company set up Saflor Oil Refinery. Saffola brand was launched. 1971 has been a watershed year for Marico. Harsh Mariwala, the grandson of Vallabh Das and representing the third generation of entrepreneurship, joined the company. In the 1970s, the company went all out to promote Saffola edible oil as a heart healthy oil, which was an industry first. But way back in 1948 and 1950s itself, the company made its mark in the coconut oil industry. The first brand of the company, Parachute Coconut Oil, was launched in the 1950s and the supplies were in tins at that point of time. However, in the 1980s, the company broke new ground by replacing the tin packs by plastic bottles. It was a pioneering industry leading shift. In 1990, the company was rechristened as Marico. During this process, that is between the time Harsh joined and the company became public in 1990, Harsh Mariwala was behind several path-breaking initiatives. In the 1970s, he set up a national distribution system reaching up to the retail level. In the 1980s, the organization was revamped and strengthened with the induction of professionals. The roadmap of Marico, once it was re-established as Marico, was impressive. There have been several product introductions and product line acquisitions on the way, and the journey continued in terms of product portfolio expansion. However, what was extremely important at that point of time was that several internal strategic initiatives such as 3Ps, 5Es, behavioral training, culture building, TQM, and strategic planning were commissioned. The company inducted several top ranking leaders and managers from reputed multinational and homegrown companies. By 1997, Parachute Coconut Oil achieved 50% market share in branded coconut oils. During the period 2000 to 2022, the company continued its growth journey. However, the company also had to encounter a full scale marketing war on Marico's coconut oil leadership from the dominant multinational company HUL. We will cover more about that later. As you can see from this milestones chart, the company continued on its growth journey by adding new products, by merging businesses, demerging businesses as the journey moved on. As I said, Harsh Mariwala coming into the company was a major turning point for the company because Harsh did not belong to the class of entrepreneurs who were hesitant to bring in professionals. Instead, he was decisively hungry for people who were pedigreed in the best business schools and companies. He decided that the first professional recruit for the company would be the CHRO. He recognized so early on the importance of leadership in human resources. So he recruited Jaswant. He and Harsh engaged with talented candidates, recruited first Vice President Operations, followed up with the CFO appointment, and added Vice President Marketing. Subsequently, he and Jaswant added the next level of managers and a host of management trainees. To break away from the small company mindset, he took risks to pay competitive salaries to hire the best from the industry. He believed sincerely that without such talent, he would not be able to build a business of scale. I'm talking about Harsh's leadership style mainly because business development owes a lot to the leadership style of the top man or top person at the helm of a company. Several of the initiatives which Harsh Mariwala took to strengthen the leadership bench to enhance the skill levels went a long way in making Marico the leading company that it is today. He postulated the first value statement of Marico after several deliberations across the top leadership and top managers. It was the first value statement. He said that the three P's of Marico would be people, product, and profit. His management style was one of walking the talk. He took the lead in demonstrating to the new organization the values he espoused for the people. How did you do that? You do it by demonstrating in actual practice the preachings that are espoused at the higher levels of leadership. As far as Harsh was concerned, he had six drivers for demonstrating that he meant a solid and progressive management style. He focused on uncompromising product value for the customers. He made capital investments to upgrade manufacturing towards higher quality. In this process of product development and manufacturing upgradation, the new leaders who joined the company contributed a lot. He also brought in the concept of total quality management. There were cases when the company walked out of businesses when the quality parameters were not to the satisfaction. He also promoted the concept of boundaryless collaboration and communication within the company. He espoused participation, involvement, and ownership in and by the teams. Nobody was called an employee in the organization, they were all referred to as members. Openness, risk taking, and trust enabled the company to take seemingly adventurous decisions, but forward looking in their thinking and execution so that the company could move on the growth journey. While he aimed at strong performance standards, he also strove for work life balance for his team members. The company also undertook behavioral training during those years. To reinforce the value system, Marico unveiled a number of skill and behavioral training programs. Some of these were management by results, value workshops, relationship management programs, particularly at the leader and managerial levels, both horizontally and vertically, relationship reviews, and cultural reinforcement. All newcomers were expected to undergo at least three training programs in the first 2 years. He also brought out a 5E model. To make a difference to the organization, each member was expected to follow the 5E model. The 5E model Harsh postulated would make a difference to Marico. The 5 E's were educate, engage, enable, evaluate, and evolve. Marico believed that culture is unique to the organization. Therefore, it would represent a sustainable competitive advantage for the firm. The journey of Marico was a journey of its products and the brands. You can see here the early campaigns undertaken by Bombay Oil Industries and to some extent Marico in the 1960s, 1970s, and 1980s. Saffola was promoted aggressively, Parachute coconut oil was promoted, comparisons between Saffola oil and other oils were made, and the health wise approach of Saffola was promoted. The bottle of revolution was also brought out significantly. Thereafter, the brand language became more intriguing, competitive, and health wise. When Marico was formed, the advertisement said 200 employees walked out of Bombay Oil. It was an intriguing ad, but it focused the attention and interest of people on formation of Marico. You can see the other advertisements that have been the hallmark of Marico. But what was very competitive, and what was intriguing was the advertisement for honey. It was the first company which tested by the sophisticated analytical equipment NMR the purity of honey, and it said that it was better in purity compared to any other market brand, particularly that of Dabur. If we summarize the various actions taken by Harsh Mariwala in his regime, particularly in the first half of his tenure, there were many. The first was building consumer brands. He developed a professional sales organization and he resorted to branding and advertising. Even in the early years, he brought in a famous branding and advertising company from France to design its brand positioning as well as repositioning. Establishing Marico itself was his masterstroke because it helped him create a new ethos and value system, and he was able to induct top talent. Diversifying product range was another step which he has taken. He moved from coconut oils to edible oils and health foods. Thereafter, he reinforced distribution and retail structure. He also provided a lot of attention to establishing competitive plants. He established a modern contemporary plant in Kerala close to Kopra. He also created new work and management processes. However, the family separation took an emotional toll. Yet, despite the weak financials, he went about buying out the stake of those who were willing to move out. A premature but highly successful public issue helped the matters. He also faced the assault by HUL. However, instead of drawing back, he invested to reinforce the brands. He marshaled funds to buy out Nihar at the end of the 6 year battle with HUL. Similarly, on cost competitiveness, he successfully faced commodity competitors successfully. He deployed two strategies for that. One was to optimize the costs internally, and two, to establish the brand power to ward off the commodity generic players successfully. He also simplified the copra and coconut value chain. As we can know, coconut value chain contributed to 50% of its costs and profits. Therefore, it was important that copra and coconut value chain was simplified and made more optimal. He also built new growth engines, overseas expansion, both organic and acquisitive, and launch of a host of brands, again, both organic and inorganic, were the hallmarks of the growth engine development. He also took special steps to become popular with investors. He laid the governance foundations and he improved investor perceptions. He created a professional board with well laid principles for depth and diversity. He benchmarked the board against top ranking listed companies. At a time when his going was very good, he decided to seek succession to provide greater edge to the professionalization in the company. He brought in a new professional MD who was groomed internally as head of marketing. He also prepared the organization for transition well. Right now, the company is moving into the ESG orbit, environmental empathy, social responsibility, and corporate governance. Company is investing to achieve carbon neutrality and accomplish elevated levels of ESG. These 12 factors demonstrate that Marico's leadership has been a principal driver for Marico becoming the kind of leading FMCG company that it is today. Let me talk about two adversities which the leadership of Marico, more particularly the founder and CEO Harsh Mariwala, faced. In the 1990s, post Marico launch, Marico blazed strong growth trail. However, the other three businesses managed by the cousins languished. That obviously set in place a feeling of angst amongst various members because until then all the finances were pulled together, all the profits were pulled together, and the costs were shared. Obviously, when one business grew very fast and very profitably and others languished, the equation got upset very much. Between 1992 and 1994, there was a period of intense and painful mediations and negotiations. While Bipin Shah, ex chairman of Lipton, played a big role in trying to mediate, Finally, valuation by YH Malagam helped the company go through the separation process with fairness as well as equity. YH Malagam was a reputed accounting leader, and he also chaired several committees for the government of India in the later times. One of the things which made Harsh strong was that even during the periods of turmoil and stress, he was very open with the employees. At times, he showed the personal vulnerability as well by breaking down while talking about Marico. The employees rallied around him in togetherness, and that gave him the strength to go for a public offer. The gamble of going public paid off. The listing was a huge success, and certain promoters could exit with all fairness. The other crisis which Marico went through was the assault by Hindustan Unilever on the coconut oil franchise of Marico, which was obviously very remunerative and it represented the core of Marico. HUL acquired Tomco from Tata Group and with it the Nihar coconut oil brand, amongst others, in 1993. Hamam, as we all know, was also one of the products acquired by HUL from Tomco. HUL recognized that to grow the Nihar brand, it had to unsettle Marico. HUL unleashed a huge marketing war with high discounts to destabilize Marico's dominant position. Eventually, unable to dislodge Marico from its pedestal, HUL made an offer to buy out Marico with direct threats that Marico would regret rejection of the takeover offer. Marico stood its ground with reinforced brand positioning and packaging redesign of Parachute coconut oil, and it strengthened its distribution and retail network. After more than 6 years of market encounters and threat to Marico's very existence, HUL put up Nihar for sale and through an auction process, and Marico acquired it through an aggressive bid. In this situation, the dramatis personae were K.K. Dadiset, chairman of Unilever, Hindustan Unilever, that is, who started the war with Marico, and Harish Banwani, the chairman of Hindustan Unilever, 6 years later, who wound down the warfare. And in between was Harsh Mariwala, who stood as a rock, as a leader, who provided guidance and strength to the overall organization. Some of the more interesting details are as follows. Keki Dediset, who became the chairman of Hindustan Lever in 1996, was keen on strengthening HUL's position by acquiring promising companies. One of the prime targets was Marico. The battle between Hindustan Unilever Limited and Marico is a case worthy of business school study. HUL acquired Tomco, predominantly a soap manufacturing company. It also had in its portfolio a coconut oil brand, Tata Nihar Coconut Oil. HUL tried its best to grow the share in the coconut oil market. It was a measly 7% at that point of time, and Parachute had 48% of the market share. In order to achieve higher market share, HUL increased the discounts to retailers, gave them a 35% margin against Marico's prevailing industry standard of 10%. HUL also outspent Marico on advertising by 2:1 ratio. After various attempts from KK, that is said, to acquire Marico, Harsh Mariwala, who helmed Marico, took it upon himself for a long battle. He was not ready to lose Parachute coconut oil because it contributed to 61% of the company's revenue. Instead, he did everything possible to strengthen the product and the brand. This was a classic case of adversity bringing out the best in an individual and in an organization. There was one thing certain, however. Harsh Mariwala had the advantage of having built up the coconut oil brand from the inception of the brand from the 1960s and the 1970s. He had therefore an in-depth knowledge of the branded coconut oil business, consumer insights, sourcing expertise, a well-established distribution and marketing setup, and the significant cost optimization. However, for HUL, Nihar coconut oil was just one among the many product categories, and it was far from being a significant product in the HUL portfolio despite the various efforts. What did Marico do to counter Hindustan Unilever? First of all, it launched a new rejuvenated parachute brand backed by big ticket advertising. He also focused on the uniqueness of coconut in the Indian religious as well as household tradition. The coconut was positioned as the sacred coconut. The brand reached 18 million households and increased its market share to 52% during the period of 2002 to 2006, while HUL's Nihar, after the initial improvement, got the share reduced to 8%. Marico also strategized a rural distribution thrust by appointing around 250 super distributors who would sell only to retail in the rural markets and compensated them for the additional cost. After about 6 years of trying, HUL stopped investing in the coconut oil business. In 2006, Marico acquired the brand Nihar from HUL for about rupees 240 crores. The deal also marked HUL's exit from the hair oil category. This was a typical David versus Goliath story. We have several lessons of business development from this case study. One, whenever a brand is under threat, the brand has to be repositioned, relaunched, and strengthened. Second, the importance of advertising in reaching out to the customers can never be underemphasized in FMCG. If TV is the modern means of communication, which had the widest range, the company has to utilize that. You also need to have a very unique theme to strike the emotional chord with the customers. In FMCG, distribution and retailing is of paramount importance. Having set up initially the national distribution and retailing system, Harsh was on the top of the goal. He strategized a new rural distribution thrust by appointing super stockists and retailers. So there are several lessons of business development which underline the fact that the leadership must have the feet on the ground, but also the vision to stay aloft against crisis. As a result of the various initiatives and overcoming the adversities, Marico continued to grow. 30 plus years has been its operational span from the time it was constituted as Marico. As on 31st October 2022, it achieved a capitalization in the market of USD 8.2 billion. The shareholder return showed a compounded annual growth rate CAGR of 24% since listing in 1996. As I said, in FY22, the revenue exceeded 9,500 crore and the net profit exceeded 1,230 crore. 16% has been the top line CAGR since inception, and bottom line growth was 22% CAGR. These are all impressive numbers. These are not just double digit numbers, they were very high double digit numbers. Importantly, the international business started yielding results. It has achieved 23% of its revenues from international business. Most importantly, 95% of the brands were market leading, number one or number two. As a matter of interest, 100 rupees invested in 1996 grew to 25,161 in 2022. Some of the strategic marketing initiatives that Harsh has taken or Marico has taken are as follows. One, it moved hair oil brand to hair oil franchise itself. After a great deal of study, the hair oils which were seen to evoke the tradition were classified under pre-wash and post-wash categories. Pre-wash oils traditionally are heavier oils and they enable the oil get massaged into the hair hours before a shower to provide nourishment and pollution protection. This has been the traditional practice in the Indian households. Typical to this category were oils with herbs for the purpose. Post wash oils traditionally were lighter, fragranced oil that did the job of hair grooming. Like the pre wash oils, the post wash oils were also formulated to offer specific benefits and solutions to the users. Once this pre wash and post wash distinction was made, the company began developing a number of products besides whatever was available at that point of time. So, pre-wash hair oils were Shanti Amla, Shanti Sassan Amla, Parachute Advanced Aloe Vera Oil, Parachute Advanced Hot Oil, and Parachute Advanced Ayurvedic Oil. Post-wash hair oils were Parachute Jasmine, Parachute Advanced Coconut Oil, Hair and Care Dry Fruit Oil, Nihar Perfumed Coconut Oil, and Nihar Jasmine. In addition, several specialist oils, serums, and tonics were brought in for hair nourishment. As a result of the marketing activity and business development activity, Marico got four core brands that were established beyond any competition. Parachute in the coconut oil field, Safola in the health oil and health foods field, Livon in hair grooming field, and Setwet for male grooming. It also had several niche brands. Some examples are Hair and Care, Revive, Sil, and Medicare. The diversification was aimed at broadening and scaling up in health foods. The company aimed to reach rupees 852,000 crore top line in financial year 2024. Safola Honey, Safola Meal Maker Soya Chinks, Safola Immuniveda Chyawanprash, Safola Oodles, Safola Peanut Butter, Safola Mayonnaise were all the new products which came under the health food category. So one thing must be borne in mind in business development. Even if one product is very strong and is unassailable in the marketplace, the company should never rest on its laurels. It should keep adding new products which would be future core products. Otherwise, imagine the situation of Marico if it never added these kinds of products. It would have been vulnerable as a single product company focusing only on the coconut oils. So, the strategy of business diversification, more importantly, the strategy of business line diversification is something which any strategic marketing and business development executive must do properly and with foresight. Once there is competition, the only way in which you can be profitable is through premiumization. So the company began premierizing core hair oils. For example, aloe vera enriched coconut hair oil or onion enriched coconut oil. So, in all these cases, the basic power of coconut was combined with certain herbs and certain traditional Indian products which could add to the strength and the depth of the products. Even though Marico was a successful company, there were poor investor perceptions in the 1990s. Marico had certainly strong brands, but the perception was that it was a commodity business with low margins. Fluctuations in raw material prices would lead to unpredictability of profits. Although Hush did much to disabuse such a thought or such a perception and created powerful brands, the perception still was that the industry as a whole was a commodities generics industry. The second point that was made by investors was that Marico was over dependent on a single brand, that is Parachute coconut oil, for growth and profits. It has certainly a large share of revenue and profits in its financials, but that strength also marked the company's vulnerability. The hair oil category was likely to stagnate, impacting the long term prospects of the business, mainly because alternate methods of hair grooming that would be coming and the shift of the generations from strong oil application to minor oil application. Since it was a promoter led family business, the company was perceived to be less professional in its approach to management, corporate governance, and related party transactions. The brands Parachute and Safola were not owned by Marico. They were left with the parent Bombay Oil as part of the separation deal. The brand appreciation would therefore accrue to Bombay Oil and not to Marico's shareholders. Kaya Clinics was a retail service oriented business and a Marico subsidiary. Investors perceived that its business did not align itself with the FMCG business of Marico. Therefore, they were seeing this as a value limiting subsidiary. The company was incremental in its approach and did not take bold business calls. And since the promoters held major shareholding, the Marico script was low in volume. Unless there was liquidity in the stock markets, you would not see the response of the stock price to the developments that are taking place in the business. In order to combat this, the company embarked upon a mind shift change across four factors. One, instead of trying to be a steady and conservative company, the company decided to go on the fast track. Instead of being reactive to industry trends, it wanted to be proactive and even go acquisitive in its growth journey. Instead of being tentative on the business decisions, it decided to be confident and future looking in its business strategy. From a conservative mindset, the company moved into a risk taking mindset. This change in the mindset has led to a transformation in Marico's business profile. From the 1990s, the business profile of the company changed dramatically. What was an intensely local company became a global company. A low margin business was made high margin, particularly with premiumization, which I discussed earlier. A low value added business has been converted into high value added business by adding more enriching products to the lineup. Oils, which were the mainstay, were supplemented with more FMCG products, including health foods. Health foods were diversified over a period of time into multiple categories. FMCG line itself was supplemented by beauty and wellness solutions. So, while retaining the core strengths, the company kept on adding new businesses and within new businesses, new product lines as a continuous transformation. At that point of time, Marico organized itself into three business groups. The Nature Q business would offer products and brands that enhance the appeal and nourishment of hair and skin through distinctive products, largely based on coconut and other natural materials. That was the core business of Marico from its inception. Then it added a new business vertical called the healthcare business. It would make available a variety of branded foods needed for healthy living, drawn from agriculture and offered both in their natural and processed forms. In this business vertical, the Saffola oils were the initial core, but they got supplemented by a number of Saffola branded health foods. The third business vertical was the international business, which was tasked with building and franchising of company brands in other countries in the Indian subcontinent, the Middle East, and other parts of the world. Wherever significant Indian diaspora lived, Marico wanted to have a presence in such overseas markets. Exports came to rupees 1279 crore for the financial year 2021-22, which represented a contribution of 23% of the total revenue. Marico's strategy had three strategic themes. First, grow the core. Marico never forgotten about its core. It wanted to defend and grow its leadership position with market share gains across the core segments: coconut oil, value added hair oils, super premium refined edible oils. It created new growth engines, portfolio diversification, a healthy mix of core portfolio and future growth engines. It created shared value by having six long term sustainability focus areas which related Marico better with the investors and the society at large. These have been responsible resource consumption, climate change, circular economy, sustainable supply chain, product responsibility, and community development. These core shared values were articulated in 2013 with a futuristic target of meeting most of the targets by 2022. It also thought about certain strategic enablers. The first was go to market modeling. Marico significantly enhanced its presence in modern trade and e commerce. The share of these channels increased from 12% to 22% over 2020 to 2022. When we talk about modern trade, we talk about large format superstores such as Reliance Trends, Big Basket, More, Big Bazaar, and stores like that. Product innovations were accelerated. There has been a stage gate structure that guided Marico's product innovations from conceptualization till product launch. He constituted an innovation council led by the MD and CEO as the central cross functional forum for stress testing ideas. Technology and automation were given the pride of the place. Data analysts worked on predictive modeling utilizing the ocean of data generated as part of the regular operations and specific data captures. But Marico also built its social listening capabilities significantly to stay in line with changing consumer needs and preferences. Marico also focused on cost management. I talked about simplification of the coconut value chain as well as setting up the plants near the areas where copra was getting generated. And cost management helped the company save its monies so that future initiatives could be invested for. The new business development through incubation cell has been an entrepreneurial initiative. It had its mindset and culture of a startup. These helped in having new engines of growth for the company. So, the fundamental philosophy of the incubation cell was that it should be taking risks and you should not try to wriggle out of the risks taken. That is, there are no escape buttons. Once you seed the idea, you got to make sure that it succeeds. So, seeding the idea, germinating the idea, testing out the prototypes, and finally growing it in measured steps were entrusted to the incubation cell. The company invested significantly in consumer-centric R&D. It had 94 domain experts, of which 50 were women, with extensive experience in science, technology, and pharmacology. As a result of the R&D efforts, there were innovations. As I said, Saffola NMR tested honey was the first of its kind. Saffola Immuniveda Chyawanprash was also a modern product with time-tested herbs. Saffola peanut butter with no added sugar and Saffola mayonnaise with vitamins A, D, and D were also significant add-ons. Marico was the first to display product labels having nutrient details, including saturated fat, trans fat, added sugar, sodium, and dietary fibers. This helped build customer trust. This is an example of how the coconut oil market was operating prior to Marico simplifying the chain. The coconut farmer would give the coconuts to the copra converter. The converter would convert it into copra and then he would send it to the local broker and transporters. There would be transportation charges and brokerage. And the local broker and transporters would take it to the market broker and there would be a Vandikaran commission. From there, it would go to the copra traders in terminal markets, which will entail trader commission. And depending upon how the copra is sold to the oil millers directly or through the brokers, there would be additional trader profits and brokerage. See, Marico created a market system by which the coconut farmer could convert the coconuts into copra and then take it to disintermediation stage, directly benefiting the farmer. The distribution network has been a core facet of Marico's growth. The channel split has been discussed already. Modern trade was surpassing in its growth rate. In FY12, the modern trade had 7% share and defense was having 8% share. But in FY22, modern trade share increased to 24%. And this has been a great fillip to volume selling of products. Secondly, the urban rural split also marginally increased. The 74-26 split has improved to 70-30 split. The direct reach of Marico increased by 1 million outlets, segmented the trade market, that is the general trade market, to drive premium and new product portfolio, increased outlets over the last 9 years by zero point 0.3 million, and leveraged technology coupled with robust IT infrastructure to drive impact. The geographical presence was in terms of South Africa, Middle East and North Africa, India, Bangladesh, and Southeast Asia. It also exports to the Indian subcontinent countries such as Nepal, Bhutan, and Sri Lanka. Marico International Business is depicted here. From 1,356 crores, it has gone up to 2,179 crores in FY22. The medium term expectations are in terms of organic constant currency growth, double digit, and operating margins at a healthy 20%. The diversification, even in the international market, was with premiumization. While the core hair oils took the thrust equation, but each of the core hair oil was premiumized. In Bangladesh, certain categories were offered. In Southeast Asia, certain other categories were offered. So, coconut oil was common across many countries, but hair care also started assuming big importance in certain countries. Similarly, healthcare became important in certain other countries. So, for each cluster of countries or for each region, the company came up with appropriate category planning as well as brand planning. So, what was behind the brand power? You would have seen from whatever I have discussed so far that the growth of Marico has been the growth of its brands, and the growth of its brands has been the growth of its products. At the core has been its forward looking corporate and business leadership. Talented internal marketing team combined with external brand advisory teams, and that led Marico to develop its brands in a highly skillful and highly dominant fashion. So, if you see this chart, market leadership is reflected in each of the categories that the company has. Brands such as Parachute, Nihar Naturals, Oil of Malabar were in the coconut oil category. They have a market share of 61%, ranked number one. Parachute is the number one brand with 82% market share in Bangladesh. Saffola, the super premium refined edible oils, have 76 market share in their category, again ranked number one. In oats, Saffola oats are 32% market share but are number two. Parachute Advanced Nihar Naturals Hair and Care became 35% market share products, but they have the number one market share. Same applies to various other products. And the dominance in terms of both absolute market share as well as relative ranking implies that Marico had all its essentials that I described in the previous slide. That is, forward looking, emboldened corporate and business leadership, strong talent in internal marketing teams, and choice of appropriate external brand advisory teams and advertising companies. All of this resulted in the kind of market share position that the company enjoyed and continues to enjoy. And these were supported by the initial value system that was put in place that focused on uncompromising position on product value, strong manufacturing capabilities, total quality management, and an organizational mindset that emphasized customer connect. In today's situation, the facts relating to Marico are really dominant. 2,400 is the size of company workforce, but that this company workforce is turning out nearly 10,000 crore of revenue talks about strong physical and financial productivity. The company covers as many as 5,000 towns, and there is still headroom to cover. Parachute is the world's largest coconut oil brand, and 1 out of every 10 coconuts grown in India is used by Marico. 58% of the members are in marketing, HR, and technology as women folk. 70% of the total workforce are millennials. 1 out of 3 Indian lives is touched by Marico directly or indirectly through its products or services. 118 plus million households are touched during the year. The company made 15 acquisitions in 15 years. 1.5 plus billion packs are sold every year, indicating the kind of productivity and production throughput that occurs in the various plants of Marico. By 2040, the company wants to be net zero in terms of carbon usage and emission. Marico has taken up this target of net zero emissions across global operations by 2040. Harsh Mariwala, Chairman Marico, and Saugata Gupta, Managing Director and CEO Marico, drive this initiative. This basically comprises of three key enablers: inventorization of direct and indirect emissions across operational footprint, investment in low carbon technology and systems, responsible consumption and production to boost climate action. And the plan of action covers zero coal strategy, phase out of fossil fuels, transition to 100% renewable energy, electrical and thermal, transition to externally verified carbon neutral operations, switch to certified green buildings, and monitoring of carbon sequestration potential of afforestation drive. So, with these three enablers and five plans of action, Marico is confident of being net zero. The first 5 year ESG material goals were substantially achieved. FY22 goal of energy, reducing energy intensity at plant operations, has been achieved. Reducing GHG emission intensity, scope 1 and 2, was also achieved. Water stewardship continual goal that continues. Circular economy, zero PVC use in packaging has been achieved. Recyclable packaging has already been achieved with 100% recyclable, reusable, or compostable packaging portfolio. Currently, 20% of critical value chain partners are on level 1 of responsible sourcing. The reason why Marico is going ahead with its strong ESG focus is that this would be one principal differentiator in the marketplace as new climate control regulations step in. They would also provide strong entry barriers for the company in a field that may continue to be generic. So, apart from the various strategies which are carried out and executed at the product and brand level, to add more value in the products and to enhance the brand power, the company is also raising the corporate brand power and the robustness of its operations in the global benchmarking of its ESG practices. And that would be a great source of strength for the company as it tries to move towards even further growth in 2025 and also by 2030. So I hope through this case study I have been able to illustrate how business development excellence can be achieved. It can be achieved through leadership, it can be achieved through organization, it can be achieved through culture, it can be achieved through product development, manufacturing integration, marketing capability, and above all, a unique organizational culture which is collaborative and entrepreneurial. And the company has to be continuously adding products, adding businesses that would serve as future goals while retaining the current course, defending their leadership position, and enhancing wherever it is required. So a comprehensive 360-degree strategy and execution covering all the functions is required for successful business development. This is illustrated by Marico. And in this process, definitely there would be adversities. The adversities faced by Marico in terms of the family separation and also in terms of the 6 year marketing war launched by Hindustan Lever are not simple adversities. They were very dangerous adversities for the company's existence. However, as a leader, Harsh Mariwala stood the ground, and as an organization, the entire team of employees stood their ground, rallying around the leader to make Marico an even more strong company, an even more innovative company. That is the lesson which we get out of this case study, and that's why I term this case study as success through the adversity. Success in the face of adversity, success despite adversity. So adversity should bring in the best of us as individuals, as organizations, and as companies. Thank you very much, and I hope to see you in the next week's lectures.